Yo, so going over this second trade I took today, you can see middle time frame relatively rangy, like over the past one, two, like hour and a half, 2 hours, relatively rangy, came up. I expected a reversal, and also this was after the fact, but I saw we came into this rejection area AOI, like where I think price will react to, and then more importantly, I just noticed this now. But if you go to the higher time frame, you can see we're in this downtrend, which I didn't realize when taking these trades. But look, downtrend, like proper downtrend, and then there's literally just the trend how it is. And then I took two shorts today, so that's what you want to do in like a trending range. Is like you wouldn't want to take a long, you wouldn't be able to like trust that. So if the market structure is relatively bearish like this, like how I trade, is I wouldn't wait for a bearish extension here to take a long because the market's already bearish. I want an extension like this because the structure is likely to continue. So a thing like this near an AOI maybe, and then to continue the trend, I take a short, but only targeting the 50%. So that's literally what I did today, both trades, and I just realized that now. So that's one thing. Then yeah, we've got this trade right here. We can see we came in. I'll get DXY. What is this? Yeah, so this is the bearish. You can see pretty bearish, and then we got this. We already did make a bottom wick, but I did like how cleanly it overextended. So you can see bullish all the way up, literally like just volume. And then we can see the shift that we got. It's a bit unclear. DXY is pissing me off. So yeah, we come up, we have this high right here. And then we have these lows right here. So these lows and this high is what I based it off. So this high got broken by this high. So we came up, broke this high, boom. That's the high. And we came down. So like once we broke that high, I waited for a break of these lows. And then we broke these lows right here. And I would have liked to enter in a bit early from memory. Because I did enter a bit late. I'm not gonna lie. Actually, no, that's a decent spot. I entered in there. Targeted 1-to-1. Oh, I could have had a stop loss like here. I would have made that a bit more comfortable having it in like the 50% tool I use. But yeah, it targeted a bit over, and yeah, went to take profit pretty decently. Not the cleanest shift, but what I'm trying to do is shift. Like the shift has to happen within the candle. It's like it can overextend great, but if it has a shift in like the next candle, I don't like that. I don't like having a shift in the next candle. But also with the first 15-minute candle of the hour, you have to worry about volume because that usually happens, especially if you like like the sessions, like the first 15-minute of the hour is usually like the second 15-minute usually continues. So sometimes you have to be wary. Like if I trade from 5 p.m., which is London Open, I won't probably trade the first 15-minute, but if it has a good setup, I'll wait for the next 15-minute candle to open and take out the high and then take out a low, because that's usually what happens with the first 15-minute candles when a new session opens, is basically what I was going to say. Then you can see here, these lines right here are, so you can see, yeah, it kind of kept coming up. Usually I like my trades to just dump and like with volume, but you can see here we came up and then came up almost to like where I entered. Then we came down and came up pretty high up. It felt like it was a lot higher when I was actually trading, but if we get just to say this right here, this is the minute candle structure, just so you can see. Yeah, so when this minute candle opened, like I don't like my trades reversing on me, and if they do try to reverse, like if it breaks a high, I ideally want to be out of the trade then. So that's what these were. They were just 1 minute highs where it was like I'll drag my stop loss here, and then I'll drag my stop loss here, which you can see these lines are just like points of areas, you know. Then here, like, it went a bit above, but yeah, I didn't have my stop loss there. I lied. I had it on this second one from memory, and then yeah, I just kept trailing my stop loss down, and you can say that's a bad thing to trade that way. But my trading style is like usually with hella volume. So if it, like, I like breaking the highs and breaking the lows. So if it breaks these lows and then breaks a 1 minute high, it's usually a sign of a reversal. And then if it's a sign of a reversal, it's usually gonna hit stop loss. If it's already in here, like if I enter and it instantly does that and breaks a high, I'll wait for a hit to stop loss. But if I have these and it continues pushing down, I'll maybe trail my stop loss, or I just kind of watch the trade. I'm not like, oh, if it gets to this point, I'm out. But if it gets to this point right here and it keeps pushing up a little bit, then I can decide whether to close the trade or not. I do have a stop loss, that's why it's there. So price can go up here. But a majority of my trades go instantly to take profit, and if it does that, it could be better to secure profit, like a little bit break even, when you know what it will do, because you collect data. That's how I collected data. That's how my mentor collected data. He told like a bunch of us in the group we're in, like, you should be wary if it breaks a high, if you're in a short, if it breaks a low, if you're in a long. If it does that, you should look to exit the trade, or at least he does. So yeah, that's just one thing. And yeah, good trade. That's my second winner of the day. I might be done. I probably should leave it there. We'll see how London treats us. It's pretty rangy now, so that's actually really good. And yeah,